Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate finance to reveal the juicy secrets within these filings. In this video, we're diving into Glacier Bancorp Inc. It's the latest quarterly report, and let me tell you, there are some interesting moves happening beneath the surface. So buckle up because we are about to decode what this financial snapshot really means for the company. Alright, let's get straight to the numbers from Glacier Bancorp Inc. They've just released their financial condition as of the 30th of September 2025 and as of the 31st of December 2024. Looking at the big picture, their total assets have grown to a whopping $29 billion at the end of September 2025. That is up from around $27.9 billion at the end of 2024. Now that growth is good, but we need to see what is driving it. A huge chunk of that growth, $18.7 billion in fact, comes from their loans receivable. This means they are lending out more money, which is usually how banks make their money, but it also means more risk. They increased their loans by over $1.5 billion since the end of last year. Now, even though they're lending more, they've also increased their allowance for credit losses to about $229 million. This shows they are preparing for potential loan defaults, which is a smart move, especially with looming economic uncertainties. On the other side of the balance sheet, their deposits have also swelled to over $21 billion. This is vital for a bank as it is their primary source of funds. Non-interest-bearing deposits have seen a significant jump too, which is great news as the bank gets to hold onto that money without paying interest. Now let's talk about the engine of a bank, the net interest income. For the first 9 months of 2025, it hit a very impressive $622 million. This is a solid jump from the previous year's $513 million. This increase is from them earning more on their loans and paying less in interest on their deposits and borrowings. Essentially, they are making more money on the money they lend out. Speaking of lending, their loan yield was 5.87% for the first 9 months of 2025. That is a nice bump up from 5.58% last year, which means they're getting better returns on those loans. And guess what, their funding costs are down too. Their total funding cost was 1.63% down from 1.81% last year. This means they are paying less to get the money they lend out and earning more on it. That is a double win. Beyond just lending and borrowing, Glacier Bancorp also pulled in over $100 million from non-interest income in the first 9 months of 2025. This includes things like service charges and fees from customers. While it is a smaller piece of their pie, it is still important for overall revenue. Now, running a bank isn't cheap. Their non-interest expenses for the first 9 months were about $474 million. This includes salaries and benefits occupancy costs and all the other expenses to keep the lights on. While expenses are up, this is understandable given their recent acquisitions. Scroll efficiency ratio 63.12% high center. The efficiency ratio, which measures how much it costs a company to generate a dollar of revenue, is 63.12% for the first 9 months. This means they are spending about 63 cents to make a dollar. This is actually an improvement from last year's 68.98%, so they are becoming more efficient. A big story here is the acquisition of Bank of Idaho Holding Company, or Boyd, on the 30th of April 2025. This added over $200 million in goodwill to their books. Goodwill essentially represents the premium they paid over the fair value of the acquired company's assets and liabilities. It is often a sign of expected future growth and synergies. They also issued over 5 million shares of their common stock as part of this deal. And just when you thought that was it, they are also announcing the acquisition of Guarantee Bancshares Inc., or Guarantee and its subsidiary Guarantee Bank and Trust on October 1st, 2025. This is a huge deal, adding over $3 billion in assets and issuing another almost 11.4 million shares of stock. They are clearly on an aggressive growth path through acquisitions. Now let's look at the health of their loan book. Non-performing assets as a percentage of their total assets are just 0.19%. That is incredibly low. This means very few of their loans are in trouble, and even with the growth in loans, their allowance for credit losses at 1.22% of total loans seems reasonable. Historically, this number has been stable. Looking at their equity, they have over $3.6 billion. This is their cushion against risks and a source of funds for future growth. Plus, their tangible stockholders' equity to total tangible assets at 8.72% is solid, reflecting a strong capital base. Scroll overall assessment Tyson Tar. So what is the verdict on Glacier Bancorp Inc.? They are a bank that is growing rapidly through smart acquisitions. Their core operations are strong with increasing net interest income and improving efficiency. They are prudently managing credit risk and have a very healthy capital position. The aggressive acquisition strategy is a clear sign of their ambition to expand their reach and market share. The key challenge ahead will be integrating these new acquisitions smoothly and continuing to manage credit quality in what are still uncertain economic times. But based on these numbers, they seem to be navigating these waters well. What is your take on Glacier Bancorp's strategy and these financial results? Do you think the acquisition spree will pay off? Let me know your thoughts in the comments below. If you found this breakdown helpful, give it a thumbs up and subscribe for more corporate deep dives. And don't forget to join our Discord community linked in the description below for even more exclusive content. Thanks for watching, and we'll see you in the next decode.